A lot of people believe that if you don't have perfect credit or a huge amount of stockpile cash, you cannot buy a home. And this is not true. I'm going to show you some ways in this video that you can get around this, some programs that will help you out, and some loans that you can use to your benefits. Maybe you're trying to, rebuild your credit, or maybe you're just, trying to restart your life. You don't have a bunch of cash laying around, but you're tired of renting. I'm going to show you some ways to get around that. My name is Travis Koff. I'm a local veteran realtor here in Jacksonville, Florida. I would love to help you with your move if you're coming here, but this is not Jacksonville specific. This is anywhere in Florida. I offer a free relocation guide for Jacksonville in the comments below, or in the description below. All you have to do is click it, enter your email. I also offer my resume. It just kind of tells you about me if you want to work together. You can also book a call with me, but by the end of this, you should know about the programs, the loans, and the process, and you should feel confident moving into that. So we'll jump right into it. So first, we'll talk about the process of buying a home. And while it does seem a little bit scary to buy a home, I can promise you it's not. It's just a lot of paperwork and a lot of waiting. So it's pretty easy. You just have to sign your name a bunch of times. And that's the only downfall, is that you're waiting a couple of days. The process is typically maybe 30 to 45 days, 50 days-ish, somewhere around there if that's on the long end, maybe 60 days. But typically around 30 days, I would say, is an average time for this. So first, you're going to get pre-approved. You're going to talk to a lender. They're going to go over some of your credit. They're going to give you a pre-approval amount, which is going to be basically what you can shop for. I definitely recommend this, because if not, you're going to get attached to a property that may be out of your price range. And when you get that pre-approval and you can't afford that property, it's going to be a big bummer. It's going to put you out of, the market. You're like, man, well, I just don't even want to buy a house anymore. You're going to find that house that you really love, and then you're not pre-approved for that amount, and that really sucks. I've had it happen twice, and that's a huge learning curve for me as a real estate agent. And I will be honest, that is a big bummer. It does make people feel some type of way about buying a home. It makes you feel defeated, really. So after you get your pre-approval amount and you find a house, you're going to make an offer. So let's say you find a house that you really, really love. You want to get this house. You want to move in today. You're going to make an offer on the property. You're going to say, hey, I want to buy your property. They're going to negotiate terms. Your realtor is for you. And then you're going to move on to the process. So after this is going to come into the inspection period. So the inspection period, you're going to hire an inspector to inspect the property, obviously. And you're going to say, hey, I need to know what's wrong with this property. And then after you find out, after your inspection is done, you're going to go back to the sellers and say, hey, okay, cool, guys. This property needs X, Y, Z fixed. Can you fix this, yes or no? And then you negotiate terms off of that as well. So there's a lot of negotiating, which is why you should hire a realtor. And then you're going to go into the appraisal and loan approval. So these are very important as well, because you want your property to appraise out to what you're buying it for. If you've agreed to buy a property for a certain price and it doesn't appraise to that price, that can affect closing costs. That can affect you getting into the property as well. So this is very important. So after you do this, after you have your appraisal and inspection, and you agree to terms on fix whatever it is that may need to be fixed, then you're going to go to closing. So this is where you're going to take your cool photos. You're going to get your keys. You're going to sign a bunch of paperwork. And it's going to take like 30 to 45 minutes on average, I would say, something like that. So that's a little bit of a process, but it's not too bad. So the first loan we're going to talk about is probably the most powerful loan that you could really have, and that's the VA loan. I know a lot of people talk about this, so I'll try to be quick on it. The VA loan, if you're a veteran, is so powerful, man. I am a veteran myself, and I bought 2 new construction homes, and I've walked away with money at the closing table every single time they've wrote me a check. And it is amazing. First off, you don't have a down payment, so you don't bring in 20% of the property. You don't bring in 3% of the property, 5%, whatever it is. You might have to put an EMD down, which is just an earnest money deposit, which is just basically saying, hey, I'm serious and I want to buy this property from you. So that might be like, $1,000, something like that, is what normally I put down, like $500 to $1,000 what the buyer puts down with me. So you just kind of negotiate that, but that's really all you have to put down. And typically you'll get that back at the end of closing, after you have, seller's credits and negotiations and things of that nature. Typically you won't pay anything out of pocket. Sometimes you have to, especially if you're rated over 10% with the VA, then you don't have a funding fee charged with this. So the VA loan is super powerful. Then you have no mortgage insurance with the loan. So basically, if you had a typical loan, let's say a conventional loan, and you only put 3% down or 5%, you would have a mortgage insurance premium every month, which is going to be anywhere from like $100 to $400. It kind of depends on the property value and your credit score. And this is an extra bill every single month, but because the loan is backed by the VA, you don't have to worry about this. So that is amazing. It saves you a couple hundred every month, and it moves you into a property. You start building equity in your property and have something to actually build for yourself instead of renting a property. Also, the interest rates are super competitive. They're lower than the typical rates. Usually I find about 0.5% lower. So maybe if, typical are at 6%, then you might be at like 5.5 or 5.4 or something like that. It just kind of fluctuates, but typically they are a lot better. Can save you money every single month. The next loan we'll talk about is going to be the FHA loan. So this is a Federal Housing Administration loan. So this can go as little as 3.5% down. The thing that does suck about this loan is that you're gonna have to put mortgage insurance onto the loan, so that's gonna suck because you're gonna have that every single month. If you don't put down at least 10% of the total purchase as a down payment, you're gonna have this for a 30-year term. So what you wanna do once you get that 20% equity in terms of like your loan is you're gonna wanna refinance this out and go to like a conventional loan or something else where you don't have to pay that MIP every single month. So think about that when you're buying the property, but it is good for people who have lower credit. It's more flexible, it'll help you out. Just the down part is really that you're going to have more mortgage insurance, and that's tough. It's an extra bill every month. Future Travis here. I meant to add something to the video about the VA loan, but I totally forgot. I just wanted to add real quick. Most people know this already, but if you're a veteran, you're 100%, you get no property tax on your property in Florida. Also, if you are not 100%, but you have a rating with the VA, then you get a property tax reduction based off your current status, or your current rating rather. And then also they are considering removing property tax in the whole state of Florida, which is amazing. So I don't know if that's going to happen yet, but just, skeptical. They're really talking about it, so we'll see how that goes, but just something to keep your eye on. But anyways, back to the video. Sorry for bothering you. The next, we're going to have USDA loan. So USDA loan is going to be more of a loan that is trying to get people to move out of, just typical areas where everyone's kind of packed on top of each other. It seems that they're trying to move them into places where other people could fit out, build great communities. Essentially what this loan is a zero down payment loan. You're going to have lower interest rates, lower cost for insurance. It does have to have certain income limits for you. So here in Jacksonville, it's about $90,000 for 1 to 4 people in the household. And it goes up more and more as more people live in the house with you. And so this loan has to be used in certain areas. So the property has to be in a certain area for it to qualify for this loan. So this really isn't a loan specifically for you. It's more so for the property because they want people to move out to these areas. And it doesn't have to be in super rural areas. Like you can still get this here in Jacksonville in some areas. They do offer in quite a bit of area, but I will say they are more prominent in like the Middleburg area, which is really nice. If you haven't checked out Middleburg and you're thinking about coming down to Jacksonville, Florida, that place is amazing. I would love to show you around there. I love Middleburg. I live like 5 minutes from it. I talk about it all the time. I think it's going to be the best place to move here in Jacksonville area in the next couple of years. But yeah, so USDA loan will help you get into a property. Unfortunately, the only thing that sucks about it is that it's going to be where they want the property to be and not where you want the property to be. So it's something to think about on that end. Next, we're going to talk about the conventional loan. So the conventional loan is going to allow you to put 3 to 5% down. So the mortgage rates on this one the mortgage insurance, are going to be a little bit cheaper than the FHA loan. So you're going to have less monthly payments every single month because you're not putting that full 20% down. So that's amazing. So it's great because this helps people who maybe don't have a lot of cash anywhere, but you have good credit. You can jump into this as well. And the best part about this is that the PMI can be moved away later. Like you could take the private mortgage insurance off later on. So like I said, with the FHA loan, you're not going to be able to if you don't put at least 10% down. If you have a conventional loan, if you only put 3 to 5% down, whatever it is, later on, once you hit that equity threshold, you can take this off the property. So you won't have that extra monthly payment every single month, which can be extremely annoying. And then we'll talk about some of the first-time home buyer programs. So these are going to be aimed at people who have never owned a home, or if you haven't owned a home in 3 years. Essentially, how this is going to work, these are going to be programs that are going to go on top of your loan. So let's say you use your VA loan, but you have closing costs and you want to use one of these programs. They'll assist you in buying a home because they want people to go in there and they want people to own homes. So they're going to help you with your closings, your down payments, maybe even sometimes repairs, and they're also forgivable sometimes. So we'll jump into it. So first, you're going to have the Florida Assist program. So this is going to offer you up to $10,000 on a VA, FHA, USDA, and conventional loans. So this is 0% non-amortizing deferred second mortgage. So what this means is you're not going to stack interest on this loan. So as long as you pay it back, or if you just pay it back when you sell the property, you don't have to do it until then. Or if you refinance out or something like that, or if you want to use this property as a rental later on and you want to refinance it, that's the only time you have to pay this loan back. But you're not going to have an extra monthly payment on top of this one. So that's really cool. Allows you to get into that property, like I said. So with other loans, you may have that down payment of cash and stuff like that. Maybe you have a little bit of cash, but you want to keep it in your pocket. Maybe you can qualify for this loan and then also keep that cash and get into a property and pay that off later. Then you're gonna have the Florida Home Ownership Loan Program. So this is gonna be essentially a second mortgage, same thing as mortgage insurance essentially, and it's gonna offer you up to $12,500. It's gonna be a 3% fully amortizing loan, and it's gonna be a second mortgage, as I said. 30-year term, so you're just going to pay on this over the 30 years, so you can pay it off early however you like. There's different stipulations with everywhere, so you might be able to pay this off extremely early if you want to, instead of continuing to pay it for 30 years. Then you're going to have your FHA Preferred and HFAA Advantage Plus, which provides 3 to 5% of the loan amount for a down payment and closing costs. Assistance is forgivable second mortgage, excuse me. So this will forgive over 5 years at 20% every single year. So that's pretty cool, is that if you stay in the property for 5 years, use it as your primary residence, then you can actually be forgiven for this loan. So this must be used with Florida Housing HFA Advantage, conventional loans only, and home must be your primary residence. So these are the things to consider when you're trying to apply for these programs. There's tons of other programs out there, but I don't want to make the video too long. And again, my name is Travis Koff. I'm a local veteran realtor here in Jacksonville. I would love to help you show you the city. I would love to help you find a beautiful home for you and your family. I offer a free relocation guide. I offer my resume as well. And then I'm going to put a link down in the description that you can set up a meeting if you want to have a conversation about moving to Jacksonville, or if you just want to ask a few questions, stuff like that. That's going to be in the description below. All you have to do is book a time and we will see you on there. Again, thank you for watching, and I hope you have an amazing rest of your day.